Investors eyeing a slew of corporate mergers. Pharmaceutical giant Pfizer is nearing the deal to acquire Allergan for as much as $150 billion. Canadian Pacific making a $28 billion offer for Norfolk Southern. If that deal is approved, it would create a rail network stretching across most of North America. I want to bring in Nuveen Asset Management Chief Equity Strategist right now, Bob Dahl. Bob, good to see you.
Thanks, Maria.
Thanks so much for joining us. To what do you attribute this most recent, rally and euphoria around U.S. stocks?
Less bad news out of China. The Fed's not going to kill us. And third quarter earnings, while not great, weren't horrible either. And all that's just a bit of a relief, and we're moving from kind of the middle of the trading range toward the higher end again.
I guess we all know that the industrial part of the economy has been under pressure.
Yes.
Manufacturing, that could be already in recession. So we've been counting on the consumer. And here we go. Once again, this morning we got another bad sign for the consumer. Best Buy trading down. They're cutting guidance for the fourth quarter. So are you also counting on the consumer?
Absolutely.
Really?
While Best Buy and Macy's and Kohl's and a few others,
Walmart.
of course, Walmart was good and Lowe's was okay and Home Depot was good. It's mixed. The important point is bricks and mortar is not where they're spending their money. They're spending a lot of money. They're buying new homes, trading up in homes, buying cars, buying experiences, not going to Macy's to buy shirts.
This is
just an issue quickly. That's all areas of the economy that are helped by extremely low interest rates.
Absolutely.
So now what?
Oh, we should definitely raise rates.
Right.
I mean, if rates were going Fed funds from 0 to 2, we have a discussion. But rates are going from 0 to 1/4 of 1%. It will not matter.
But how do you look at the brick and mortar nature of the S&P 500 itself? There's a lot of components in the S&P 500 that are not Amazon at 990 times trailing earnings. I mean, these are some certified disasters in the public equity space. We're seeing, I think, the XRT, which is the retail ETF, is down about 12% for the year. How do you do you buy into that, or do you just stay away from that?
You just have to become more selective. As you know, consumer discretionary off the 09 bottom, best of the 10 sectors. Now you've got to differentiate. You've got to own the Home Depots and the Lowe's, but you got to be careful of the department stores that are struggling with same-store sales. So it's just more bifurcated, means you've got to own less
I just
of them.
want to
But don't
point
give
out,
up on them.
too, with sporting goods, Dick's sporting goods numbers were horrible. The stock was already at a 3.5-year low, something like that.
One of my favorite calls, short Dick's.
The forecast for the current quarter was bad, Keith. And then City Sports is going out of business. It's a kind of a local sporting goods chain, but they filed for bankruptcy. They're liquidating.
Right, and somebody is getting a shipment right now from Amazon buying the very same stuff.
Yeah.
There's a shift from bricks and mortar to e-commerce, and there's shift away from those small ticket items to other things. Consumers are spending a lot of money. It's just not on the visible stuff that we go to the store.
Well, it's not visible in GDP or retail sales either, by the way. I mean, these are not numbers that are...
Have you checked out home sales? Existing home sales and new home sales are up more than 10% year over year.
That
is massive.
And the car sector.
But
You're right about autos as well. Autos doing really well.
That's not a huge component of GDP. GDP is 1.5% in the most recent report. Retail sales just hit its lowest level of the year. That's an aggregate U.S. retail sales number. It includes a lot of clicks.
So consumer net worth is at an all-time high. Job markets as best have been in 20 or 30 years.
Good number in October.
Real wages are starting to pick up. You're seeing the consumer, the amount they're spending on the necessities, food, energy, and debt service as a percentage of their disposable income, 35-year low.
But all that stuff, if you're a cyclical investor like me who called the top in 2007, when all those things are my asset as a short seller, all those things happen at the end of a cycle, not at the beginning of a cycle. This is the end of a U.S. consumer cycle. What is it?
That's where I disagree with you.
You disagree that this is the end?
Consumers' cycles don't end when wage growth is just beginning to pick up. Yeah, when they've been there for a while, but this cycle's been a very elongated cycle, and we're not going to get a powerful consumer cycle, I don't believe, but nevertheless, consumers not finished in my book.
Yeah, so we're starting to talk about getting into the Home Depots, the Lowe's, even Sherwin-Williams has done phenomenally well, but are you starting to see value overseas? Because we're starting to see the valuations get a little lofty in the leaders in the U.S., so what's going on overseas? Because I've noticed that the DAX has outperformed the U.S. on a 1 month, 3 month, 6 month, year basis.
But it's also coming from a very low level, right? The DAX, that's all I'm saying.
Yeah, when they're implementing quantitative easing over there, the dollar's getting stronger. So
you have to have some money overseas. I'm not crazy about the U.S. multinationals because of the strength of the currency. For the same reason, I think you have to like the European multinationals. They have that same tailwind at their back, and there's some really good companies. And as you point out, they're cheaper than the U.S. counterparts.
So back to so you disagree that the U.S. When do you think the U.S. could ever go into recession? Ever?
Oh, absolutely. Absolutely.
He thinks the recession is going to happen next year, 16.
Well, there are a lot of people speaking, a lot of smart people like yourselves speaking that, and I just don't see it that way. We'll have a recession at some point. I think that the consumer will keep us from a recession, and the manufacturing side is kind of teeter-tottering. Watch the PMIs, Purchasing Managers Indices in October, kind of globally started moving in the right direction. If that continues, I think the probability of recession goes down.
And haven't the PMIs in Europe also shown some improvement?
Well, we're talking about the 1 month.
We've gone
from, the 19-member Eurozone, to be clear, came at 53.1 and beat expectations, and Spain was actually leading the charge. So you have a former member of the PIGS leading that route, and that's in the face of, we've got Volkswagen, which came down, and really kind of hampered on investor sentiment. But you're starting to see a lot of movement, the consumer spending over there as well.
But if you look at the data, this is a one-off data point. If you've been long cyclicals, industrials, PMIs all year long, and the guy who's making that call is Francois Trehan at Cornerstone, you've been saying that PMI's been bottoming since July. The trend is actually the PMIs continue to slow on a 3-month basis. So was October a 1-month bounce that looked like stock markets or not? I'm on the other side of that. I think that the trend is bearish in PMIs and ISMs.
You may be right, but as you'll agree, since the August bottom, the cyclical stocks have outperformed the defensive.
We got to get this.